Hello friends, welcome to the video on the Bretton Woods twins. In our earlier session on international monetary system, we have seen that the Bretton Woods conference paved way to the establishment of two important institutions, namely the International Monetary Fund IMF and International Bank for Reconstruction and Development IBRD. In this video, we are going to examine these two institutions in a bit detail. Welcome to the video. International Monetary Fund IMF is still one of the most influential international organizations. Started its function from March 1st, 1947 with 30 members. Now it got 189 members. Headquarters is Washington, D.C. The managing director as on April 2020 is Kristalina Georgieva. There are four broad objectives of IMF. One, to promote international monetary cooperation, to facilitate expansion and balanced growth of international trade. The third and fourth one are more important, to promote exchange rate stability and maintain an orderly exchange rate management. Finally, provide borrowing facilities for countries to finance temporary balance of payment difficulties. There are three functions of IMF. One is surveillance. Surveillance means supervision. The IMF will supervise the economic activities, the economic system, as well as monetary system of its member countries, and will publish periodical reports. The obvious function is the financial assistance. IMF will provide borrowing facilities for countries who are facing balance of payment difficulties, but we will examine financial assistance a bit detailed. IMF will provide technical assistance. It will provide training for policymakers as well as officials of member countries in the field of economics, more particular in banking as well as public finance. Let us focus on the financial assistance and how borrowing can take place in IMF. Every country is assigned a quota. Quota is based on economic importance and volume of international trade. The size of quota determines the voting power as well as ability to borrow of member countries. Obviously, US is assigned the largest quota, followed by Japan, Germany, China, and France. Every country must pay 25% of its quota in gold and 75% of its quota in its own currency to IMF. It's popularly called the gold tranche and credit tranche. But paying of 25% of quota in gold was discontinued in the year 1978. It was replaced by special drawing rights SDR. We're going to examine the SDR. Now, the country can borrow 25% of its quota without any condition or restrictions provided it is facing a crisis in its balance of payment. But further borrowing will involve high rate of interest. Since IMF provides only short-term borrowing facilities, repayment must take place within 5 years. Now, this quota serves three purposes. It constitutes only the resource of the IMF. It is only the resource available for IMF. It determines how much a country can borrow, or SDR. It determines the voting power. Now, let us shift our focus to SDR. Special drawing right was created by IMF in the year 1969 and started with the effect from January 1st, 1970. It's a pure international reserve to supplement and visage to supplement the international reserves of gold as well as foreign exchange. In our earlier session, we saw that the foreign exchange reserves of the country comprises of foreign currencies, gold as well as SDR. Now, their accounting entries in the book of IMF can only be used among the central banks of the country, cannot be used for private commercial dealings. It's also called the paper gold, even though it's not a paper, it's not a gold, but still it's known as the paper gold. It's not backed by gold, it's created out of thin air. can be used only among the central banks of the country and central banks with the IMF to settle any crisis in balance of payment. Initially, when SDR was introduced, the value of SDR was determined as 1 SDR is equal to $1. But from 1974, the value of SDR is tied with a basket of currencies. It's a weighted average, and these weights are revised in every 5 years. The 2015-20 weights are like this: 41.73% of US dollar, 30.93% of euro, 10.92% of Chinese yuan, 8.33% of Japanese yen, 8.09% of pound sterling. That is, the weights are determined on the basis of the value of 5 currencies. Apart from the direct borrowing facilities of IMF, there are 4 other kinds of facilities. One is the buffer stock financing facilities known as BSFF, started in the year 1969. It is for financing the commodity buffer stock of the member countries. The facility is equal to the 30% of borrowing members' quota. There is a facility called EFF, Extended Fund Facilities. It is to provide fund for member countries to finance their balance of payment crisis, and this borrowing is a long term. That is, originally IMF will provide borrowing facilities only up to 5 years, but under the extended fund facilities, the period can be extended up to 10 years, and the countries can borrow larger than their quota. There's a program called Structural Adjustment Facility, SAF. It is basically designed for the poor member countries and poor less developed countries to solve their balance of payment problem and to carry out medium term of macroeconomic and structural adjustment program. There's an extended structural adjustment program started in the year 1987. And finally, we have a compensatory and contingency financing facility, CCFF. It is to meet shortfalls in the cereal imports of the poor.
IMF helps those countries who are facing balance of payment difficulties. Now, we shift our focus to the next Bretton Woods institution, namely International Bank for Reconstruction and Development, popularly called the World Bank.
The International Bank for Reconstruction and Development is the other institution which is a product of the Bretton Woods Conference of 1944. It provides loans and developmental assistance to the creditworthy poor as well as middle income countries. It may be noted that the IMF provides financial assistance while the World Bank provides developmental assistance. Headquarters like IMF, it is Washington DC, and the present president is David Malpass as on April 2020. It is organizationally very similar to the IMF. The objectives are to the reconstruction and development of member countries by facilitating investment of capital for productive purpose, to promote private investment, to promote long-range balanced growth of international trade and maintenance of an equilibrium in balance of payment, to affect international investment, to promote international investment, and to assist a smooth transition from a wartime to a peacetime economy. It's owned by 189 member countries, and the voting power is proportional to the subscription. While IMF is having a quota system, World Bank is having a subscription system. Here, each country must appoint a governor as well as an alternative governor, and they meet once in a year. Financing policy is to promote economic growth of middle income as well as poor countries, provides developmental assistance, and resources are raised even from the financial market by selling bonds and other assets. World Bank indirectly lends even to the private sector, and we will see there is an affiliate of World Bank known as IFC that is basically designed to help the private sector, even though the World Bank lends only to government or those people who have the guarantee of the government. Now let us focus on two important financial programs of World Bank. One is known as the Special Action Program, SAP. It is to assist member countries to adjust their current economic environment. The Support Structural Adjustment Program, policy changes, protection for export, as well as maintenance of economic infrastructure. Like IMF, there is a Structural Adjustment Facility, SAF, of 1985 for World Bank as well. It is to reduce the balance of payment deficit of member countries and to maintain a rapid economic growth. Basically, it is used to finance imports. There is an extended structural adjustment facility which was started in the year 1987. Now, let us focus on three important institutions under the World Bank, or which are the affiliates of World Bank. We have International Development Association, IDA, International Finance Corporation, IFC, Multilateral Investment Guarantee Agency, MIGA. Now let us examine these through World Bank institutions in a bit detail. IDA is an affiliate of World Bank established in the year 1960 to supplement the objectives of IBRD. IDA is basically an institution to make available loans to member countries on softer terms and for longer periods. Softer term means loans without having the rate of interest or at a very reduced rate of interest. That's why sometimes IDA is also known as soft loan window. Consists of 173 members. Now, as far as the objective of IDA is concerned, it is to provide supplementary finance for less developed countries on easy and flexible loans terms, to promote economic development, increase productivity, and raise the standard of living in less developed countries. By doing this, to supplement the objectives of World Bank. As I said, the financing policy is interest-free loans, and these loans can be for both productive or even for unproductive purpose. It's a longer period loans in which up to 40 years it may take place, in which the initial 10 period is known as a grace period, in which no repayment is required. IDA will provide loans in foreign exchange, and it is repayable in foreign exchange as well. Loans are usually known as credit, which are made to governments only. And basically, IDA provides loans for those projects in which no assistance is provided by the World Bank. Before approving the loan, IDA considers three criteria: poverty, performance, as well as project criterion. And most of the loans provided by the IDA is towards the sectors of agriculture, education, health, nutrition, water supply, as well as sewerage. Moving to the other institution, IFC, we have seen that one of the objectives of the World Bank is to promote the private investment. And this is in fact the private sector arm of the World Bank. It's an affiliate of World Bank established in July 1986. It comprises of 184 member countries, and the broad objective is to provide capital for private enterprises in LDCs even without government guarantee. Usually, World Bank provides capital or loans to those firms which do have a government guarantee, but under the IFC, it provides capital to private enterprises even without government guarantee. It considers only those enterprises which are predominantly in the industrial sector and contribute to the economic development of the country. Projects must be in the private sector and must be productive in nature. And those enterprises which are experienced and competent will get loans, but not more than half of the capital of the enterprise. It provides large, medium, and even to small-scale industries, and provides assistance in three ways: either through a direct investment, in the form of loans or equity participation, or IFC helps in securing foreign as well as local capital. It also provides the technical assistance. Moving to the third affiliate, which is Multilateral Investment Guarantee Agency, MIGA, established in the year 1988. It's an international finance institution basically to provide or to ensure the smooth flow of foreign direct investment. That's why the primary objective of MIGA is to encourage the flow of foreign direct investment in the developing countries. It offers a political risk insurance and credit enhancement incentives. It protects foreign investment against political and non-commercial risks. It ensures only new investment and mostly the foreign direct investment. It also provides promotional as well as advisory services of the governments of less developed countries to improve their investment climate. Try to establish a credibility among investors and improve their credit rating as well.
Thus, we have seen that the Bretton Woods institution of IMF helps those countries who are facing balance of payment difficulties. On the other hand, the World Bank provides development assistance. Hope that this video is useful to you. You can always visit our blog www.skpeco.blogspot.in. Until next time, stay safe, happy learning. Thank you.